Good morning, trading world. It is May 20th, 2022, and this is my pre-market outlook and technical analysis for day trading the SPY. Today, I would like to point out that as of this week, we now have everyday option expirations available on the SPX, the mother of all options. I know most retail day traders don't really trade the SPX directly because it is a beast, $3,900 a share. However, there is a correlation with the SPY. After all, the SPY is the smaller version of the SPX. To be exact, it should be 1/10 of its size. Having everyday option expirations give you a easier way to handicap risk for each day of the week. Majority of the time, the market operates efficiently handicapping risk using option analytics. If you follow me, you know about how important the weekly market maker's expected move is to me. This is derived directly from option analytics. This everyday expiration gives you an easy way to see daily risk by looking at volatility and seeing the expected move for each day. So, let's bring that into the picture. That's the SPY. Let's bring up the SPX. Can't type for anything this morning. All right. Bringing up the SPX. As you can see, Friday's expiration, Monday, Tuesday, Wednesday, Thursday, Friday. So we have a expiration for every day. And the way that you can handicap things over here, this is the amount of volatility priced into this day's options. And that correlates to a direct amount of movement, plus or minus 51. So it's just moved up even more since I started looking at this, and it just changed right there. But when I first started looking at this, what it was saying about today is that the SPX could have up to $49 of movement today. That's up or down. And it changed. So we're looking at $51 of movement, which means it could be a pretty volatile day today. And since the SPY is just 1/10 the size of the SPX, you could estimate the SPY movement to be plus or minus 1/10 of this $51, which is $5 and some change. It's not completely accurate, but it does give you a quick and dirty way to estimate risk on the day. So we have everyday expirations on the SPX. It is not on the SPY yet, but it is correlated 1/10 the size, so easy to do the math. So I just wanted to bring that up for the day. I thought that was kind of neat about them bringing the everyday expirations. So give me a moment and let me bring up the levels for today. All right, here we are with the levels of the day, starting on the support side. We have Jack support at the 392 to 391 area. Then we have queen support at 390 to the 389 area, and then king support all the way down at 388 to the 383 area. On the resistance side, we have jack resistance at 394 to 395, and then queen resistance we have 396 to 397, which is going to be an area of importance today for the upside, trying to break through that. And king resistance we have 398 to 404 area. The main thesis for today is bearish, closing below the 389.46 with a projected target or low of between 390 and 383. The alternate thesis is bullish, closing above the 389.46 with a projected target high of about 397 to 404. The current channel we are in is 397 to 379. Be aware of bear market behavior, so the alternate thesis could be more explosive on this expiration day. There's going to be a lot of people closing out options at some point today, and that lends itself to a very explosive move. Now, that explosive move could be up or down. And what people don't understand is there doesn't have to be a lot of selling in order for us to drop. There just has to be a lack of order flow or air pockets. And that is definitely possible for us to rise or fall based on these air pockets, because there is one above basically the 393 level where we get a little bit of an air pocket, and it is definitely one below 388. So we could rise into or fall into an air pocket and kind of keep going. Also, I am seeing a possible gap up on internals that's due to a lot of the big market cap stocks seeing a lot of activity causing them to gap up. So that could gap up internals. We see it's possible that we may be opening with a gap up on the SPY, but in doing so, when internals gap up, it makes price action to be irrational, meaning we could see anything regardless of what the indicators point to until markets repair the gaps. It is possible to see a likely splash down to retest lows, but I am starting to think we may not get the real break until June. Therefore, we continue to get teased by price flirting with these lower levels. So, with that being said, let me bring up the scenarios of the day. Alright, the first scenario of the day is our expansive range day structure. And the reason I stress expansive is because usually when I say expansive, that means we're pushing boundaries. On a regular range day, we usually set a high boundary and a low boundary and pretty much bounce in between those two boundaries. On an expansive range day structure, it seems like we set a boundary, but that boundary gets pushed. It is broken, and it kind of resets that boundary and bounces again, and that boundary could be pushed over and over again. So today's expansive range day structure, we could look to set a decision area high boundary around the jack or queen resistance area before fading lower. And this is where we fade lower, maybe a little bounce off of the jack support, and fade lower. And what we could kind of get today on this expansive range day structure is kind of a surprise, almost panicky splash lower before bouncing back up. And because of the expirations and a lot of people not very enthused about holding positions through the weekend, we could get a pretty sizable bounce once this decides to turn around. So that's our expansive range day structure. This is the most probable that I see today. So keep or be aware of this possible splash lower that could take us to retest and possibly push through the lows that we've seen in the last day or so. Alright, scenario number 2 is our rounded reversal day type structure. We could get a continued push lower toward the queen or king support area and find midday chop around either that queen or king support area before spending the same energy that we use going down to go back up the second half of the day. Alright, so that's our rounded reversal day type structure. And our last scenario, we could get a very drawn out trend day up. And what I mean by drawn out, we have a lot of ground between where price action is now and where the previous close is. So it could seem like almost like a half a day affair getting back down to test the previous close to find out whether we find support there and bounce off of it and sending us back up into that uptrend. So that is a possibility. And also we're just below that 30 mark on the VIX. And when we get above 30, I usually mention this, it's possible for us to have that feel of 2-day structures in one. And if we can creep back up above that 30-34 area, we could possibly come off as though we have a trend day down the morning and then a trend day up in the evening. So just be aware of that, since we're playing right around that 28 handle on the VIX, not far away from 30 at all. So as I continue to think about this and look at it and look at more models, in which I'll probably do this weekend, it's starting to seem more and more so that we're not going to get the real break until after June. So all of this is just flirting and teasing you with these lower level price drops of a break lower, but not really breaking too much lower until June. So we'll see how it goes. Definitely, interested in seeing how we close today, because it's indications lined up that the market wants to bounce, but there's so much overhead supply that it's going to be hard to get through some of these levels to actually have that real bear market bounce of 100 or 200 points on the S&P. So I'm looking at it now on another chart, and the daily chart is starting to peek its head up again to want to bounce. But even though that is happening on the daily, the weekly, which still has more power, is still pointing down. So we have to be careful, and it just seems like we're going to just kind of rock back and forth in this range, getting teased with price breaks until things kind of align with the weekly and it's satisfied to where it actually can allow a bounce. So with that being said, I hope this helps. As always, know your risk. Be comfortable with your risk, and wishing you a positive trading day. Have a great one.